Stablecoins set to capture $1 trillion payment volume by 2028 could reshape U.S. monetary policy, report. Stablecoin. Crypto journalist. Anas Hassan. Crypto journalist. Anas Hassan. About author. Anas is a crypto-native journalist and SEO writer with over 5 years of writing experience covering blockchain, crypto, DeFi, and emerging tech. Author profile. Share. Copied. Last updated 3 hours ago. Why Trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards, focusing on factual accuracy and balanced reporting across all areas, from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. Stablecoins are set to capture $1 trillion in annual payment volume by 2030 and could comprise 10% of the U.S. money supply, fundamentally reshaping monetary policy as they hold 25% of the U.S. Treasury bill market with a $2 trillion supply, according to new research from Kirok and Bitso. The comprehensive report, shared with Cryptonews, reveals that stablecoins can facilitate payments up to 13 times cheaper than traditional banks while settling in seconds. The report claims that this positions them as a new financial operating system that collapses intermediaries and transforms global value exchange. The stablecoin market has exploded from $4 billion in 2020 to over $280 billion today, with monthly settlement volumes reaching $1.39 trillion in the first half of 2025. Major stablecoin issuers already rank 17th globally in U.S. Treasury holdings, surpassing countries like South Korea, Germany, and Saudi Arabia in their impact on government debt markets. Speaking with Cryptonews, Kevin DePatul, CEO of Kirok, predicts that regulatory clarity will accelerate adoption, stating that legal certainty is the starting point, as without it, even the most advanced technology struggles to gain traction. Stablecoin infrastructure replaces legacy payment architecture. The report reveals how stablecoins are evolving into comprehensive payment networks through the stablecoin sandwich model, which streamlines cross-border payments using a fiat on-ramp, stablecoin transfer on-chain, and a fiat off-ramp layer. This architecture effectively replaces correspondent banks with programmable bridges that settle instantly across borders. Virtual accounts represent a new approach, creating digital USD accounts that mimic US bank accounts but run on stablecoin infrastructure. These accounts allow self-custody while reducing reliance on local banking systems, with provisioning taking minutes instead of weeks for entrepreneurs in emerging markets. Major fintech companies are launching proprietary stablecoins to control the full payment stack, streamline reconciliation, and leverage existing distribution networks. Circle has expanded into orchestration networks, while payment platforms like BVNK create blockchain-based systems that bypass traditional banking intermediaries entirely. Stablecoin issuers generate revenue by investing the dollars they receive into low-risk instruments like short-term U.S. treasuries, retaining the generated interest. This practice creates a strong macroeconomic impact as stablecoin inflows can lower 3-month treasury yields, making issuers active participants in yield curve dynamics. The programmability aspect remains largely untapped, allowing condition-based transactions that transform static money into a dynamic financial infrastructure. Applications of this technological development include trustless escrow, automated liquidity management for corporate treasuries, real-time payroll systems, and micropayments for IoT devices that transact based on sensor data. FX market disruption targets $7.5 trillion daily volume. The report identifies foreign exchange as stablecoin's ultimate target, with the massive $7.5 trillion daily FX market still relying on T+2 settlement, correspondent banks, and pre-funding inefficiencies. On-chain FX allows atomic payment versus payment transactions that eliminate counterparty credit risk and reduce operational complexity by combining messaging and settlement into a single layer. DePatul explained that, for a $7.5 trillion a day FX market participant to migrate, banks need to adopt on-chain settlement systems so trades can clear T+0, 24/7/365. He noted early adoption on certain currency pairs, while predicting that all FX will eventually move on-chain, forcing traditional finance to adopt these settlement norms. The current payment system's three pillars face disruption through stablecoin technology. Swift messaging creates 2-3x longer processing times and 3-8x higher costs in emerging markets, while pre-funding locks $27 trillion in Nostro and Vostro accounts, costing providers 3 to 5% annually in lost yield. Traditional money transfer operators achieve low capital turnover rates, with Wise at 1.26x and Remitly at 2.23x annually. In contrast, stablecoin-powered platforms like Munsa achieve 11x monthly capital turnover. In fact, ARF achieved 56x annual turnover by cycling funds rapidly without expanding working capital. DeFi credit protocols are becoming major working capital engines, with platforms achieving substantially higher turnover than traditional fintechs. The report reveals that 21% of U.S. commercial deposits, worth $3.85 trillion, earn no yield, creating opportunities for yield-bearing stablecoins that have already distributed over $600 million. Banking industry fights back as stablecoin adoption accelerates. Major U.S. banking associations are urging Congress to tighten Genius Act regulations, warning that loopholes could allow stablecoin issuers to offer yield indirectly through affiliated exchanges. The Bank Policy Institute, joined by the American Bankers Association and other groups, cited Treasury estimates that yield-bearing stablecoins could trigger $6.6 trillion in deposit outflows from traditional banks. The banks argue that stablecoin yield programs could heighten deposit flight risk during economic stress, leading to tighter credit conditions and higher borrowing costs. However, Coinbase and PayPal continue offering stablecoin rewards despite the legislation, with CEO Brian Armstrong stating, "We are not the issuer," in defense of their programs. The report projects stablecoins will facilitate 12% of global cross-border payment flows by 2030, representing $1 in every $8 sent across borders. Visa has already partnered with Yellow Card Financial for stablecoin payments across 20 African countries, while MasterCard enables 3 billion cardholders to purchase crypto through Chainlink integration. Emerging markets present particular opportunities where domestic payment rails are slow, costly, and fragmented. Stablecoins can enhance these systems by treating fiat like data packets, allowing faster, more transparent flows with embedded compliance that reduces operational friction and bypasses traditional correspondent banking relationships. Follow us on Google News, Trending News, Recommended Popular Crypto Topics Price Predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar. Live Ripple forecast. Is the $10 XRP rally about to ignite? The most important crypto news on XRP and top altcoins in our live updates. XRP price prediction. Veteran analyst declares XRP a must-buy. Charts point to explosive upside. XRP mining launches next-generation mobile app that transforms smartphones into cloud mining hubs. Price analysis. Solana price prediction. Jeff Bezos Space Company now accepts SOL, biggest partnership of the year? 2 days ago, by Alejandro Arich. Price analysis. Bitcoin price prediction. Long-term holders refuse to sell. Next leg up could shatter expectations. 1 day ago, by Arslan Butt. Price analysis. New ChatGPT predicts the price of XRP, Pepe and Dogecoin by the end of 2025. 6 days ago, by Tim Hackey. Best crypto to buy now in August 2025. Top crypto to invest in. 2 days ago, by Alan Draper. Best upcoming crypto coins in 2025. 11 hours ago, by Inesis Tavares. 13 best crypto presales to invest in 2025. Presale crypto list. 1 day ago, by Alan Draper. 16 new and upcoming Coinbase listings in August 2025. 2 days ago, by Elijah Rankovich. 16 new and upcoming Binance listings in 2025. 2 days ago, by Elijah Rankovich. What is the next crypto to explode in 2025? 1 day ago, by Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. Just now, by Leon Waters. Ripple, XRP, price prediction 2025, 2026 to 2030. July 5, 2025, by Eric Huffman. Ethereum price prediction 2025 to 2030. Will ETH bounce back? April 2, 2025, by Ben Beto.